The phone's been ringing off the hook, David, and really in terms of debt investors are the primary callers today, just as to where do we go from here. This is a buzzer beater situation in terms of them, Tesla needing to raise some capital in our view to fund the $920 million that's due coming March. So it looks like production's pretty good for the quarter, but delivery problems are really going to eat into cash flow.
It's interesting. I'm glad you mentioned the bonds. I think the bellwether this morning traded around 84 cents since the last I checked.
Right.
Is that effectively reflective of the risk?
I think it's too early to say. I mean, the dynamics could greatly change if Elon Musk steps aside, or his generous compensation package allows him to be head of product development, so he could be in a position and still get paid, but not be in a executive role, which is apparently what the SEC was seeking.
Yes, they were.
Is your assumption that that they can still go ahead with a potential debt raise with this unresolved at this point, or no?
I think a debt and an equity raise is going to be really difficult from here. I think you would almost need like a white knight situation, whether it's a Saudi Arabian, a Chinese investment partner. Right now, I think if you're an analyst on a buy-side fund, going to your portfolio manager saying now's the time to get involved is a big leap of faith.
So, Jeff, it seems like the clock is ticking on either getting a really clear sense of Tesla's production and deliveries being maybe better than expected,
sure,
so them having more runway than some people think, or the board needs to step in more than they have up to this point and
right,
push a better resolution to this issue.
Yeah, I mean, it looks like the production numbers, I think there's some stories out today that they hit the target for the quarter, and that wouldn't be a big surprise. I think the bar was pretty low there. I think the fact that they're making their own trailers to deliver the cars, and remember, that's what rings the cash register and how they get paid. So, we're really monitoring the cash flow positive guidance that they've given. I don't think they hit that. They're also seeking volunteers to deliver the cars. So, I mean, there's a lot of crunch time as it relates to ringing that cash register to bring the cash in the front door.
But you still expect they need to raise capital prior to the end of this year?
Yeah, you've got $260 million in November due. You got $920 million that looks like, at least at today's stock price, isn't anywhere close to $360. That'll convert not into stock. So we're assuming that they have to raise $2 billion in Q4. They still have some capex nuts and bolts ahead of them, as well as just the straight burn, which actually might be a disappointment this quarter, even if the production comes in line with guidance.
Why do you believe that potentially will be a disappointment?
I think it's just the ability to actually effectively deliver the cars. I mean, there's a bunch of stories on social media of people being asked to pay and then not getting their car for weeks, delays in delivery, and the fact that they now need to make their own trailers is alarming.
And you mentioned a buzzer beater just for the balance sheet and the capital structure, but next year was supposed to be, what, 75% increase in total deliveries or something like that? I mean, if you look at the consensus numbers,
right,
it was supposed to be this enormous ramp and swing to profitability.
Yeah, I mean, look, the Model 3, now that they have the tent to solve their problem, that certainly has helped. We never really disputed the production run rate. I think it's just a question of what's the demand, can they drive the production costs down to get to that $35,000 magic price point. Right now most of the cars are $60,000 plus. That's a much more limited set of demand relative to a $35,000 car that people would be getting that generous tax credit that's also phasing out.